Hello dear friends, I am Dr. Vinod Kumar Advani from the Department of the Commerce from the Bhopal School of Social Sciences. Dear friends, today we are discussing in this particular session a very important topic of GST, that is Input Tax Credit, or in short ITC. ITC is the backbone of entire GST system. In this particular session, we will cover some topics related with ITC, input tax credit, that is concepts, the various examples of ITC, and finally we will look at some important terms and conditions, essential terms and conditions to claim the ITC under GST. So, here we are starting the introduction of ITC. When we are talking about GST system, the trader who registered under GST is entitled to collect the tax from the customers, that is known as output tax. It can be CGST, SGST, and it can be IGST, but the entire tax collected by a registered dealer is not required to pay to the government. The trader is entitled to adjust to take the rebate of GST already paid at the time of the purchase of these goods. This deducted adjusted GST is known as ITC, input tax credit. Now, the major question is, we can claim the ITC, input tax credit, but for which type of goods? For which type of service? The answer is ITC is allowed on the all goods and services, all capital goods, but the condition is these goods, capital goods, services should be for business purpose, only. Under GST Act, we have clear-cut definition of input tax credit. What is input tax and what is credit? We have a definition under section 262. What is input tax? Here we have all the taxes that is paid by the trader under GST system. It is CGST, SGST, IGST, UTGST. So, trader can take the ITC for all the taxes he already paid at the time of purchase of inputs. Now, what is the definition of inputs? We have the definition of input means any type of goods other than the capital goods used for the business or for the furtherance of the business, means for the expansion of the business, growth of the business, development of the business, means all the functions that is required to run smoothly a business. So, here we have the concept of ITC in the terms of input services and capital goods. What is meaning of input? Input means the goods or intermediate goods you are using in your business or for furtherance of the business. In simple words, it is raw material or the goods you are using for the production or you are going to resell them, that is input. What is services? Services means any service you are taking, you are consuming for your business or intended to for use in the business, that is service. For example, we have a telephone connection in the office and we are going to pay the telephone bill. Telephone bill is the service and it is under 18% GST. So, definitely we will get the ITC for that particular GST also. Last but very important, ITC is also available on capital goods. Capital goods means not for the sell, not raw material, the goods that we are using in the business for office purpose or for plant purpose. For example, we purchase a machinery to be installed in the plant or the factory, or we purchase an air conditioner for the office. These goods are not to be sold to the customers, but we will get ITC because these are related with our business. In simple language, it is fixed assets we purchase. Now, dear friend, we will start the comprehensive example of ITC, how ITC is calculated and deducted from the output tax and how we have to calculate net GST after taking the rebate advantage of ITC. Here we have the example. Suppose we have a firm known as Lotus Electronics. This Lotus Electronics is situated in Bhopal. The showroom, this particular showroom, making a total sale of rupees 20 lakh in a particular month, say March 23, and total GST they collected from the customers is rupees 5,60,000. Remember, it is output tax that we collected from customers. Now, what are the expenses? What we are paying in this particular month? Listen, we have electronic goods purchase 10 lakh, paid GST rupees 2,80,000. We pay a telephone bill of rupees 10,000, GST paid 1,800. We also purchase furniture for office 50,000 and paid GST 9,000. Now, for this particular month, we are going to calculate the GST payable, net GST payable after taking consideration the availability of ITC. First of all, total tax we collected from customers is 5,60,000. But I repeat, 5,60,000 we are not going to pay to the customers. From this 5,60,000 we are entitled to get 3 different rebates, adjustments, credits, ITC. First, we will get the ITC for the purchase of inputs. Remember, we purchase inputs, we purchase goods, electronic goods 10 lakh and already paid the GST 2,80,000. Next, we get the ITC for telephone bill payment, not the amount of the bill, we will get the ITC for the GST paid, that is 1,800. Next, we will get the ITC for capital goods also. Here in this example, capital goods means we have office furniture. And what is the GST we paid? It is 9,000. So, finally, for March 23, net GST liability will be 5,60,000 minus all these 280. It is input, 1,800. It is service input, last 9,000 rupees. It is ITC on capital goods. So, finally, we have to pay for this particular month as the net GST liability to the government 2,69,200 rupees to the GST department or government. So, this is the clear example how ITC mechanism works. But dear friends, ITC claiming is not easy task. The reason is, once you are claiming ITC, you have to follow certain restrictions, terms, conditions. Means if you are not following these terms and conditions, you are not eligible to get ITC. These conditions, all these terms and conditions are compulsory, mandatory, legally required to follow if you are claiming ITC. Otherwise, we cannot claim ITC. First of all, what are the conditions we have? Now, let us start these conditions. The ITC can be claimed only by the GST registered dealer. A particular dealer who is not registered under GST cannot collect tax from the customers and hence cannot claim ITC. So, ITC can be claimed by only GST registered dealer, a particular dealer having GST identification number. Next, GST ITC can be claimed only for taxable supply and zero rated supply. Taxable supply means supply of goods taxable under GST, and zero rated supply is supply under export business. So, for only 2 type of sell we are entitled, eligible to get ITC. First, it is taxable goods, and second, it is goods sold under export business, goods exported to foreign countries. Next, for claiming ITC, we have to keep all the documents, means invoice, debit notes, credit notes, tax invoice for claiming ITC with ourselves in a proper manner, in a manual manner or in a computerized manner, but we have to keep all the documents, maintain all the documents related with ITC claim amount. Next, we cannot get the ITC for personal use goods. The goods, capital goods or services on which you are claiming the ITC should be for the business or for the furtherance of the business. Suppose an electronic dealer is purchasing a TV for home viewing, personal purpose, family purpose, he is not eligible to claim ITC on that particular television set because it is not for the business, not for the furtherance of the business. Next condition we have, for claiming the ITC, make sure that your supplier already paid the GST to the GST department. It means once you purchase the goods, once you show the purchase of the goods in the GST return, make sure this purchase goods already shown, already displayed by your supplier in their GST return also. It means once you purchase the goods, make sure that that particular supplier is show this particular transaction in his or her GST return. Means make sure your GST already deposited to the government account. Next, GST should be paid by the supplier to the government. Means with filing of return showing yourself, that particular supplier must pay the GST to the government. So, total we have 6 conditions, terms and conditions for claiming the ITC, for claiming a valid ITC. So, dear friend, this is the particular topic based on the concepts, introduction, examples and various terms and conditions of ITC. Now, we hope that you understand the GST ITC in a positive manner, in a good manner, and you can easily explain this particular term under GST. Thank you.